Hey everyone, welcome to Smart Investing. So, welcome back to the channel. This is the video for the continuation of the banking services sector. I apologize for not coming on. I've been too busy. I'm back, ready to throw some info at you, some research, some very hard work and evaluations coming at you. So, we have three companies that I'm going to go over. You guys are going to see the way I evaluate. I'm going to go over fundamentals, technicals, and all the likes. I'll go over um, just simple numbers. I don't want to confuse people. Just point things out here and there so you guys can see what companies are good and what companies are not. And if they're not, then you can see how they're doing anyway, just to get a glimpse of what's what. So first stock that we have, we're gonna go over. We'll start from the bottom, work our way up. So first stock up is ticker symbol CADE, CADE, Cadence Bank. Cadence Bank. We have a market cap of 3.27 billion, volume of 2.29 million. Very active, respectable market cap. High and low of a difference of about $8. Could do a little bit better, maybe $2 or $3, just on the basic info alone. Now we still want to look at this first page again. If this is your first time seeing this, with the way I evaluate, again, I use the Webull app on the mobile, and I just go through all these numbers and look at pages, and I organize these sectors and companies the way I like to. Uh, Again, I do it in order of sectors, but the name of the companies, they're not organized by price. They're not organized alphabetically. They're not organized by market cap. I just have a list of banking companies, and again, that's all I have it as, a list of banking companies, and I just go through them randomly. So again, I'm reviewing all these banks and all these sectors with the names under them in no particular order, with the names under them. So just so you guys know. So we have here $17.91. Today is May 4th, 2023, Thursday, 10:30 p.m. So very recent info. Markets are closed. We had a downtrend for the week. So anyhow, going over this company, 52-week high of 29.41 and the 52-week low of about $17. So $12 difference. Respectable, but when I say respectable, I say on my end and Wall Street's end. I'm not sure about the Main Street investor, but again, I have to consider Wall Street. Not that I like them or anything. It's just because they're involved. They have the big money. You know how the system works. Again, also with the Fed, I gotta watch these guys too, because it's crazy the way finance works. Real quick, because there's so many people involved, so many CEOs, so many meetings and nonsense with the feds and all this talk about what they want to do, how they want to do it, and the presidency and yada yada, and we're doing good. There's no bank runs, and they want to act like everything's fine when most of it is full of crap. And I gotta pay attention to all this crap, for not only for me but for you guys, so you guys know what's going on. I have a lot of homework in finance this weekend. I gotta attend and look at all these meetings of when it comes to the feds and all this crap this weekend. Nonsense meetings, but it is what it is. I gotta go through them, get insight. Not because I want to or need to, but something's gotta give, and it has to be justified. So got to keep my reputation up. So again, thank you guys for watching this channel and tuning in. So anyhow, moving on from that short little commentary. So we have here earnings per share, positive earnings, dividend. They do pay 94 cents dividend yield. I'm not too crazy about it, but it's at 5%. So PE ratio is 7.28. Not too crazy about that. I'm not too crazy about fundamentals or any crazy evaluations, whether it's undervalued, overvalued. Again, I said it before. The banking services sector, ever since a year and a half ago, it hasn't looked good. Could have been even prior to that, because it just happens to be that as soon as I started evaluating the banking sector, a few months later, 2, 3 months down the line, I realized that this is a sector that is doing horrible. So anyhow, moving on to the chart. If you look at the 5-year chart, again, another confirmation getting close to its first downtrend here, breaking that floor right here. Then the second point would be right there at around May of 2020. The second floor going down, breakthrough. The second level going down, breakthrough. The third level, level 3 as I like to call it, would be about around 1640. That's the price. And the date on that was in March of 2020. So all those 3 points are not too far away from each other. Again, once it breaks that second level going down, it's game over to me. That is confirmation that it is going to go even lower and will definitely be a trigger around level 3 going down. So you see this far drop here, definitely trying to catch up to level 1, and things are just looking very, very ugly. Now, that was the technical. Now, moving on to the analysis here. Let me see what we have here. Anything interesting? No, just trash. Moving on to the analysis. Oh, gee, all of a sudden, I see analysts rating banks. Gee, I wonder why. I wonder where you guys were last year when I was doing this all on my own. And whoever these analysts are, I don't care where they're from, you guys are like so late. I don't mean to not appreciate you Wall Street people, but you guys are late to the party. And I hate to say this, it's embarrassing to you guys. No disrespect, but again, I said it, I think, in my previous video with the commercial reads in my last video. But how is it that I'm only one person? I have a full-time job. I have a life, and I do have work and family, and I'm still able to do financial work part-time, and I'm only one person. And it's crazy how to say this, but me alone, if I had my own firm, I'm outpacing so many firms with what they don't know, what they are not doing, what they are not forecasting. And the answer is really simple. I'm doing a lot of hard work, and even on other finance channels as well. Some people are just guesstimating, not showing you how they got their answer. I'm doing my homework here with you guys, showing how I got my answer. So again, I don't watch a lot of other YouTube channels unless they're media, because they're news reporters, and I use them to my advantage because I need them for info. And then in a way, it's a mutual business model, because they use me for intel because of how good I am with my accuracy, my transparency, and with my reputation. I think I'm starting to get noticed. But anyways, aside from that, is what I'm saying is that I'm only one person, and with the amount of information and uh, work that I have done or I'm planning to do, Wall Street is just pretty much lagging behind. Um, some of these uh, managers on the round table that earn the millions and the billions, sorry to say, but the truth is, they're just doing lip service. They're not too worried about their company. They're just worried about keeping things the same, making a quick buck. But again, sorry to say, even if I was invited to be an analyst, I still wouldn't care. I wouldn't want to be a part of it, even if I got paid double what I'm getting paid now. Um, there's just some things money can't buy, and I'm gonna stand to that. So I just find it very, very interesting that all of a sudden I see 13 analysts um, on a banking stock that uh, you know that's pretty much unheard of. Uh, I don't wonder why it has so many analysts. And again, this is not a popular stock because of the market cap. So, I mean, typically when it comes to the banking services sector, and again, I've been doing this, I reviewed it for a year and a half, and now people want to jump in and act like they know everything, which they don't, because the proof ain't there. The proof is not there. So, anyhow, uh, I'm just ranting because I get frustrated with Wall Street because most of them are just full of it. It sucks to the smaller person that's trying to do the right thing, and then basically the villains are, they're the ones with the money bags, trying to screw everything up. So again, that's why I don't really associate myself with Wall Street. But then also, what sucks about it, I fall into the Main Street category, but I'm just not dumb. Uh, the reason I say that is because Main Street investors get a bad reputation. So I just want to put that out there that, not all of us are dumb. There's a very, very small percentage that I bet that there are people out there that have talent and that do work hard, just as hard as me. But again, I don't do this for fun. I don't do this, out of a good habit. I just enjoy doing finance, you know, whether people like it or not. I was just drawn into this. So anyhow, moving on to the quant ratings. Quant ratings that we have here is I disagree with this growth. I disagree unless they get acquired. Momentum. Let me look at the volume for momentum. We have volume 2.29. I will agree that I will see this number higher in more companies, momentum. And the reason being is because people that are betting the banking services sector to go down and betting that it's on a downtrend, there's more involvement with people like that because uh, it's that's where the short selling is, pretty much. That's the way to be bearish in a market as of right now, which is the banking sector. And I hate to say it, but that's where the easy money is. I don't know why so many people are still bullish uh, in the economy, well, on the stock market economy when it comes to that. But again, I would expect and forecast to see momentum go higher when it comes to the bank runs. Again, there's always winners and there's always losers in any kind of process or game. So value, I don't really care. Quality, I don't really care. Again, I stay away from the banks. So can I agree with the majority of these numbers? I would say no. I would agree more with the technicals, and we're gonna jump right into the fundamentals. So again, bad technicals and bad quants. So I guess that's what they have in common. You see here, downtrend, they had missed their mark for the earnings reports. Not surprised. So I'm going to skip all that and just jump right into the cash flow. We're going to see the annual. Hopefully they give me that. 2021 was, so it got lower actually for the cash flow. So 923 million in 2022. So they're cash flow positive, this company. Cash flow positive. I'm surprised, even though they missed earnings. Let's see. But the chart, fundamentally, I hope they can withstand the onslaught disaster. But with the chart, it just ruins everything. Wall Street is just betting down on this hard. It sucks to own a company and then all of a sudden, you just, by the look of your phone, all it has to do is with other people involved, and that's all it takes to ruin your company. Having other people involved that are not even working the business, they're just supporting it financially. Sucks to say, but that's the way capitalism works. Uh, you either win or lose. So with this stock, I'm gonna say no because it's on a downtrend, and I haven't gone over the numbers. But again, uh, looking at the chart, it is solidifying a solid decision on my end to see that it's on a strong downtrend going down, and it's gonna break these levels, the level 1, 2, and 3 on my charting analysis. Next stock up is DB, Deutsche Bank. This is, I believe, a German bank. Obviously, ADR. We look at this chart, gone up, then it's starting to go down. You have these whipsaws, very volatile. The volume is at 8 million. Market cap is at 21 billion. Stock price is at $10.28. So we're going to look at the chart again, looking at it from a max perspective. Ever since 2011 and even 2008, it just dropped. Even on the 5 year, sort of remained the same, but again, that's still way too cheap of a price. And then we have here the 1 year, then the 3 month, and then it went down and then it stood flat. So now we have the analysis of of one analyst saying that it's gonna underperform, and obviously that's based on one person. That is too easy for them to say that after the fact. I would love to see them say it before the fact, but all of a sudden they want to be honest and state the obvious. So anyhow, we're gonna jump into the cash flow and see what is going on with that. So again, just based on the chart alone, those are just we're not in a fundamental viewpoint or perspective to say that, wow, I want to go in long term and, I want to look for growth stocks. We're in a very tight environment, so I know how to manage this environment. We're in a technical environment, and we're also in a stock pickers environment. So this is why these evaluations matter. We have here a market cap of $20 billion, closer to 21 actually. But the chart is telling me opposite. That would be my number one factor for the decision. That'll be at the top of the line as to why I'm basing my decisions. Second factor would be Um, I would like to say cash flow, but not really. But in support of the numbers, number two factor, I would actually say, and they're combined, again, which I've said it before, which would be the market cap, the volume, and the price. Um, I don't know if I can say I'm looking at these as separate factors or all in one, but again, either way, all inclusive, since I'm going over them regardless, all those three numbers, they're still important factors. So it still affects my final decision to say if it is a good stock or not, whether short term or long term. So looking at the cash flow here, we're looking at the annual. Let's look at that. So, oof, very, very awful cash flow in the negative, uh, insane amount of debt. So we're talking about at least 19 billion in debt. So negative 19. And even with expectations for earnings reports, I don't know how accurate that is, but it looked like they met expectations. Looks like that's what happened, but anyhow, uh, do not add this to your watch list. Just skip it and please avoid it, as well as CADE as well. So 2 for 2. And we're gonna look at the last one, UCBI. UCBI, $2.48 billion company, volume at 752,000. Look at the max chart, fell apart. Now it looks like it was in an uptrend, but guess what? We have here the downtrend that fell apart ever since March with the bank run. You see one drop, and it's still holding up, but that second drop here just solidified it. And it broke actually this level here for the lowest of the low, which was back in 2021, and it broke that downtrend. So now we're here by trying to reach that third level down for 2020 in the year 2020. We're trying to reach these levels. Once it starts reaching these low of the 2020s, uh, that is a scary sight to see. So ticker symbol UCBI, United Community Banks. Again, at $21.56. We have here the analysis here. 8 analysts, half of them rated that at 50% hold. The other 50% rated that as a buy. I don't know why. Momentum, again, I said that earlier. I expect this to take a stronger downtrend. So I disagree with this number. I think it should be higher. Out of all these 5 factors here, I believe the momentum is the most important. Now, income, I look elsewhere for income. There's no growth in banks, no value, no quality. It's all momentum, pure technicals as of right now, betting down. Now, looking at the company and cash flow, want to pull those out, pull those numbers out. I don't want to look at quarterly. Let's look at annually. So 607. They're down at least a billion. Let me do the math. So we have 400. So above 1.75 billion, give or take, in the negative. That's what they're losing out. So awful, awful numbers. So again, don't add this one to your watch list as well. And we have these companies that have been evaluated. So based on technicals alone and the quant ratings, it just does not support it. Even though, fundamentals might say otherwise, and sometimes fundamental numbers can be manipulated, but I recognize the loopholes and all the dirty little tricks that Wall Street likes to do and some companies like to do. So again, do not add these stocks to the watch list. Thank you guys for watching. I'll see you guys in the next one, and we're gonna continue this banking sector. I'm not sure how many left I have. I can't think of the number. I have about 3 more lists to go. I can't think of how many on each list, but yeah, I have 3 more pages to go on my list, and I'm gonna try to close this out and move on to another sector. So then, thank you guys for watching. Stay tuned for the shorter video, and I'll get that going. I'll see you guys in the next.